Hello, everyone. Welcome back to How to Trade and Switch Markets. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk about some of the key events that are unraveling and going to develop over the next 5 days on the market. We've got a few things that we definitely need to look at news-wise. If you guys remember the NFP stream last week, I said heads are going to roll over these numbers and bigger in life. Trump's gone ahead and they've fired some of the statisticians over there at the Bureau of Labor Statistics. Fascinating stuff. I'm going to go ahead and give you my 2 cents on it because I had a feeling that something was going on with those numbers. I don't know if they're accurate. I don't know if they're real. But what I will say is all of last year, I was an outspoken critic of the BLS and the numbers that they were consistently throwing out for the jobs reports. And today, we're starting to see a big rebound in stocks after a big sell-off last week. We think that our interest rate expectations are probably going to be anchored more in reality now as opposed to where they were probably a week ago at this time. The rate cuts are not a foregone conclusion. I want everybody to be sure that they understand that. So when we start talking about the U.S. dollar and we talk about stocks, we really have to take into account what we believe is going to happen over the next several months. And that's always tough. It's always tough to try to tell the future. Remember, we don't have a crystal ball. We don't know what's going to happen tomorrow, but we can put ourselves in a position to deal with whatever comes our way. And right here, I mean, just absolutely huge stories. So I want to welcome everybody back up. I do want to apologize for some technical issues we've been having. Now, I don't really know what's going on the West Coast here in the United States. We're having some server issues. And essentially, we run a program called Restream.io, which blows these streams out all over the place. It blows it out on YouTube, blows it out on X, blows it out on LinkedIn. But we're having connectivity issues. And I don't know if it was because of the volcanoes or the earthquakes over in the Seattle region. We've had a lot of earthquakes around Mount Rainier, small ones, but it's messed the servers up. So the servers out of San Jose, California and in Seattle were running really slow. So we tried to connect to the Midwestern servers. That didn't really work last Friday. So the stream, if it is glitchy, I do apologize. I've done my best to troubleshoot this. It looks like we're up and rolling pretty good right now. Not very many dropped frames at all and a pretty hot connection, but that can change. So if it does change, I apologize. I don't really understand what's going on with the servers or the technological infrastructure here in the United States. But it's very important that if you're having lag, if you're experiencing lag through your broker, You need to run some ping tests. You need to run some speed tests, and even reach out to your broker and say, hey, if your servers are running slow, you need to tell me so I can adjust my trading strategy. And maybe, we're not going to be doing high impact scalping on 15-second charts if there's that kind of lag. So if you guys are dealing with internet lag here in the States, I hear you. I feel you. It's been a real frustrating thing. I absolutely hate it when these streams get glitchy. It's not much fun. We put a lot into trying to develop a good clean presentation for you. And if it's glitchy, man, it's really tough to watch. So I do appreciate everybody's patience. So good to see everybody back in the room. Gordon Williams, good to see you. Greg Goforth, Boomer from Southwest Oklahoma, Boomer Sooner. And then we got the Texas Longhorns in the house with Gordon Williams. It's almost football season, college football season. Best time of year. I absolutely love it. I got my season tickets for the Montana Grizzlies, and I'm going to be down there, the 30th of August? I believe the 30th of August or the 6th of September. I don't know when the first game is, but I'm getting ready for it. We're already gearing up. It's good to see everybody back. Greg Okello, good to see Okello. Let's see. Ralph H., good to see you. Ralph H., Bobby Bob. Always a pleasure. New week, new opportunities. Absolutely, Bobby. Andrea, good to see you. Andrea, welcome. Hi, Shane. It looks like the U.S. dollar Japanese yen is getting close to the 38% bid on the weekly with the 13 EMA at 146.61. It's a great place to begin. Andrea, I wanted to start a little bit. The Kiwi was a great trade. We had a trade opportunity out that came out last Friday that I put out, and it came within about a pip of your entry. So it really did depend on who your broker was, if you got filled or not. But let's get right out to price action and go ahead and have a look. U.S. dollar, Japanese yen's a great place to begin. If you guys have any questions at all, if you had to go, if you have any markets you want to look at, today's a great day for it. We're game planning. I've got a few levels that I think are going to be pretty good later in the week, and we're going to go ahead and approach those as we see fit, right? That's what Mondays are all about, guys. Game planning, being ready to go, getting up to speed, and really attempting to develop good trade ideas for the next several days. All right, so I like the Fibonacci retracement sequence right here on the weekly. Really a tough chart. In all honesty, Andrea, really a tough chart to sort of look at and say, oh, this market has a direction. Clearly, we've really ground higher since that tariff panic back in April, but it's not been an easy road. This has been about as whipsaw as we've seen the yen in a long time. We're up, we're down, we're up, we're down. But this right here is a pretty darn good zone, this 146.71 area. And I'm not sure that that's exact, but I was working right from this swing low to this swing high. We'll go to a monthly chart here in just a second. But you're absolutely right about the 13-period EMA. And I absolutely love it, 146.57. I love it when the 13-period EMA is going to converge with the Fibonacci retracement level. That gives us that much more confidence and really dials in our trades. That's what I call a trade that you probably don't want to miss. So we're watching that closely there. So I like your entry point. I think that let's back off to a monthly chart here, though, with the dollar yen and see exactly what's going on. Yeah, see, this is what I like right here. This is good stuff. Nice little spike high. Last month's high was 150.84, and then right here you've got 150.91. So we sort of had a little bit of a peak above last month's high. I call that a failed auction. You see this a lot. This is a really textbook but just price action strategies. You don't need any indicators. All you need to do is understand your key levels. In this instance, you've got a monthly top right there, monthly high, 150.84. And what do you got right there? 150.91. So just in the first few sessions of August, we traded up above the previous month's high by a few pips, and then we reversed and absolutely are cratering now. That is a textbook failed auction. And what that means is it means that it was almost a trap. A lot of people call that a bull trap or a squeeze. For me, I just call it a failed auction. And what happened was we traded up above that level. We tested, really we're making a run at that 151 zone to see if we could catch some bids and drive the price higher. And what happened? It was the complete opposite. That is, it's sort of a bull trap. Everybody was piling in over last month's high thinking we were going to get a bullish break. And what happened? Just a big hammer right there, hit everybody on the head, and has really dropped price in a big way here. You're off about 2.5% to open August. That's a big move, guys. That's a big move. So I love the level, 146.71. Let me make sure that that's exactly where it needs to be, and it's not. So let's dial this in exactly. Remember, if you're going to use the Fibonacci retracement tool, it's imperative that you are as exact and precise as possible. And the reason why is you got to be sure that you know where your entry points are and where your support zones are. Now, you can't really be perfect all the time. You really can't be, but you can really try to make an effort to dial these things in about as close as you can get, and that's pretty close. I don't worry about fractional pips, really. So right there, 146.69, a couple of things that this zone has going for it. We'll have a trade idea out a little bit later today, and this may be it. But right there, you can see we've got a monthly Bollinger midpoint. That's big. I call that the 50-yard line. That's sort of where the Bulls and the Bears slug it out in terms of the Bollinger Bands. But right there, our Bollinger midpoint is going to be right around 146.76. We've got 146.69 at 38%. And then, like you said and pointed out in the live chat there, our weekly chart right in that zone, 146.57-ish is that 13-period EMA. 13-period exponential moving average, and we base this one on the mid. I don't use the close for my own personal moving average. I base it on the mid, so the HL divided by 2, that's going to be my hot zone and what I'm looking for there out of my moving average. 3 indicators coming together right in a big zone here, and that's a pretty sharp bid. I think that's going to be a pretty sharp bid. Let's see. Andre, yes, great trade on the Kiwi. Nice Monday trade to start the week. It was pretty good. I mean, it really was pretty good. Let's go ahead and do a little trade recap here. We'll talk about what we need to do here on the Kiwi. Really was happy with the way that this trade panned out. Let's see. Welcome to the Switch Markets community, guys. We're trying to build. This is a work in progress. In the coming weeks, you're going to see sort of a new look on these live streams. We're already looking at different ways to revamp this, maybe upgrade a few things here and there so these things look a little bit sharper than they do. I've been working with the same format for like the last 2 years, and it's starting to get a little bit stale. So we're going to do some changes. So we're going to be looking to update the presentation. And also, I want more interaction with you guys. So if you have any questions at all, you just ask them, and I'm going to do my best to get back to you. Remember, if you do need a place to trade and you're an international client, meaning you reside outside of the United States, check your local municipality, but Switch Markets might have you covered. Lots of bonus money over there, zero commission accounts, tight spreads. Bring your ambition into focus with Switch Markets. And that's sort of our partner broker here at How to Trade. The idea is simple, guys. We're going to take some of our education from that How to Trade and bring it on over to the Switch Markets community and try to get everybody up and trading better than they've ever traded in their life. I think we can really, really help in a lot of ways, not just trade ideas, but actually working through some of the psychology and just to answer some questions. It is a challenge to be an active trader. It is a challenge. It is lonely, and you can really fall into situations that aren't good, especially if you're by yourself. We'll talk about some pretty heavy stuff toward the end of the stream here that happened locally, and thoughts and prayers are going to go out to the victims involved. But this was like right in my backyard. And what happens to people in all walks of life as they get isolated and they start to lose touch with reality a lot of times. And as traders, I'm not trying to bum anybody out. I love to trade. I've been doing this for a long time. A lot of you have been doing it a long time and couldn't imagine living without the markets. But it can be isolating and it can be a very, very lonely endeavor. So it's very important that we're always monitoring our mental health. And that's very, very important. We're going to talk about that a little bit at the end of the stream, and I'll answer any questions you may have on the subject. All right, Kiwi, let's go to our trade update. This is one that we put out right after NFP last week. Our heads were spinning after just an absolute terrible set of numbers that we really couldn't believe. Lewis, good to see you, Lewis. Absolutely couldn't believe how bad the jobs numbers were. They were so bad that it got the BLS folks fired. I'm not laughing at their misfortune, but a lot of us were really questioning the jobs numbers for about the last 2 years. And well, the Trump administration just said that's enough of that. I don't know if it was the right thing or the wrong thing, but it got everybody fired. We're going to talk about that too. But what it did do, what that big number did, was it brought this Kiwi into play. It brought an absolute ton of volatility towards the dollar. And if you remember, this chart right here was our trade idea. I posted that about 3 hours after NFP. And what happened? Well, we had an absolutely fantastic look. You can see Friday's high was right up there at 59.29, and today's high was right up at 59.30. So think about that. We only went one tick, and then we reversed back down about 25 pips, 30 pips. That's pretty good stuff, guys. That's another failed auction. So there's a lot of traps out there. I don't think I would be playing breakouts right now on the Forex. I would be looking rotation. I'd be playing support and resistance zones. This one depended on your broker. 59.33 was our level. I believe we had 59.30. I think I put 59.32 up as a potential entry point. And right here, you had 59.36. So our 59.30 was 6. The fractional pip is 6. So you were about 1.4 pips or a pip away from your entry. That really would have depended on who your broker was. Remember, all the brokers, the prices are a little bit different. So if you were in a position where your broker or liquidity provider decided to trade higher and snap up all those orders, then you got filled. If not, you might have missed the trade. I always, when I see something, when I see with price go within a pip of what we're trying to do with our entry points, you have to. You really have to take the trade. Now you say, Shane, how am I going to do that? I said, well, 59.33 was our level. I put down a 59.32 entry point, and we're at 59.30.6. I mean, you're right there. That's a decision that you're going to have to make. Personally, I like to shade at least 5 pips. That was one I was real conservative with because of the NFP. I didn't want to necessarily dive into it, but on today's open, you had to really be there going, yeah, we got to take that trade. Pretty darn good one. It's already cashed in, so if you guys got that one, great. Andrea, yes, great trade on the Kiwi. Nice Monday trade to start the week. That's exactly what I thought. I was really happy to see how that one panned out. Pretty good stuff right here. All right, let's go ahead and see what we have right here. This is a trade that I was stalking. This is the 9 EMA with RSI confirmation, and I was really hoping to get this, and in hopes for children and losers, so we don't hope. But this is spot gold, 5-minute chart. And today's been an interesting day for spot gold. It's sort of rotated around. You had really a tremendous short-term run-up right here, right around the U.S. Open, and then you sort of pulled back into the center of this range. So for me, I'm thinking rotation, but I'm also thinking this might be a pretty good area to sort of buy a pullback here during the U.S. session. So the problem is we don't really have our criteria. About 10 minutes ago, I was pretty confident we were going to have this trade to execute. We just didn't get into oversold territory. So now we're sort of waiting for a buy signal, but it's not going to do us much good. I would be very careful trading 5 minutes, 1 minute charts, 15-minute charts without any sort of confirmation on just the flat 9 EMA strategy. Be very careful with that, guys. You're going to want to make sure that you cover your bases. And one of the ways that you can really avoid those choppy markets, those flat markets. Remember, when I say rotational, essentially I'm talking about flat price action. I'm talking about price just really not moving directionally either to the bull or to the bear. This is one of those markets where I would call it a little bit higher risk trading making this type of trade here on the gold 5-minute chart right now for this time of day. But if we do see a little bit of a dump maybe, and then we get beneath that 30, I'm willing to take that risk right off the bat. I think we can get in there for a real tight scalp and see if we can put some more points on the board here on a Monday. Sort of fits into our psychology, keeping our risk low, our risk limited. I don't want to go into a hole today. We're going to talk Monday psychology in just a second. U.S. dollar, Canadian dollar. This is one that we definitely were targeting last week. We talked a lot about the sort of the budding trade war between U.S. and Canada. Just basically, it's Trump against Mark Carney. If you guys know anything about Mark Carney, the BOC, or actually he's the new prime minister up there in Canada, but he was the leader of the BOC. He was also a big-time honcho in the Bank of England, who we're going to talk about later this week. But you could definitely, he's one of the bankers of the world. The guys worked everywhere, and we're starting to see the beginning of a significant trade war between Canada and the United States. So when I look at a pair that I may want to be trading with some good hot volatility, it's going to be the Kiwi. Now we've got a lot of action in WTI crude oil. We're off about another 1.5% today. That's going to seriously hurt the Canadian dollar, especially when we're down about $4 or $5 here in the last 2 sessions for WTI. So if we're looking at a pair to trade maybe down the stretch this week, U.S. dollar, Canadian dollar is a pretty good one. I would be watching that one closely. In any case, right here, very simple daily chart. You can see this is our 920 EMA crossover, and you've got a really nice big yellow candle right there. And you remember our coded 920 strategy. It's very simple. You buy in on the yellows and you're selling on the purples. This purple right here didn't go very far. The reversal, that would have been your bid, potentially your bid right there. So what would I be looking to do here as far as taking a side on this trade? I'd be looking probably to go long. Bullish bias a little bit according to our 920. We do have that crossover in play, and then we can just lay some Fibonacci's right over the top there. And you can see it came right down to 137.62. You bounced off of that. You're up to 137.76. There's a lot of pretty good stuff going on right now in the Forex. If you're trading those majors, those dollar pairs, be careful that you don't make one bet on the United States dollar across the board. You don't want to be double and triple exposed, but right now, a lot of those retracement levels are coming into play, and that's absolutely huge, especially if you like trading the majors and if you're interested potentially in trading the greenback against some of these other currencies, which there's going to be a lot going on here in the near future. We're going to talk tariffs here in just a second in what is probably one of the most complex tariff situations. You can see the Swiss government. The headlines keep coming out of Switzerland. A lot going on there, a lot of worry about the tariffs, a lot of maybe delays. Maybe they're on, maybe they're off. Nobody really knows. But this is pretty interesting stuff, guys. So be dialed in, watch the news feed, and we're going to go ahead and cover some of those key things right now. Let me see. David the Holy One, no more trade 9. Yeah, I mean, as far as the 9 EMA goes right here, we don't really have it. We don't have it. We've got to get beneath that oversold. We got to get into oversold territory here, down here beneath that 30, and then we could potentially be looking to take the bid. But, yeah, for right now, David, I'm not seeing a trade develop here. We've got to see a bigger move, something that tells us that we're at sort of at a point of disequilibrium. I mean, I hate doing hindsight. Hindsight's 20/20, and it's so easy to get back, go back in time and find one of these winning trades and say, oh, it's a great strategy. But realistically, there was your spike. You were severely in overbought territory there, and then you came off big. And as soon as you came off big, you had to be looking for this sell, and sort of there's your sell right there. First bar closed beneath that 9 EMA. There's your sell. It's been pretty good. I mean, the sell was up there at 33.77. Now you're down to 72. Sell's about a $5, sort of a $5 move. I'm sort of on the other side. I would love to see this market trade down a little bit further, and then we can bid it. We'll throw some Fibonacci's on the gold market too before we sign off here today. So I hope that helps. How it helps you, David. I mean, it's just not quite going to come our way, and sometimes it just doesn't come our way. And if it doesn't, we have to wait. Let me see. Gordon Williams. It's a new higher. Yeah, absolutely. So what we like to do on a Monday is we like to really set the table for the rest of the week. We look at the key events, look at our psychology, try to really get things lined up for the week. And this is something that I've talked about a lot over the past, year or so, is psychology, how to design your week, how to really build a winning mindset. And a big part of the winning mindset was generating momentum. And one of the worst things you can do, there's a couple cardinal sins that if I was running my trading room, if you guys were working for me or I was working with you and we had a trading group and I was evaluating traders and I said, okay, what is trader X doing on a Monday? What does the tendencies look like on a Monday? Because it becomes very obvious a trader's vulnerability just by looking at their performance on Mondays and Fridays. Now, Monday, a lot of folks come in, you're hyper aggressive and you want to trade. And that's great. I want to trade too. The problem is if you dig a hole on a Monday, you can find yourself in a world of hurt. And the reason why is it becomes too difficult psychologically to dig yourself out of a hole. If you always feel like you're behind and you're trying to dig out of a hole and trying to get profitable, it is truly exhausting. And I don't want you guys to get exhausted. I want you to be ready to go, ready to trade when it's time to trade. Now, some Mondays are great. Today, there's a lot of action in the U.S. equities indices. We're going to look at those before we sign off as well. But from a big picture, did we expect a big rebound Monday today? I didn't, but there was reasons why. You saw the big rally in stocks. We'll cover that in a minute. My point is this. We show up on Monday ready to go, ready to trade, but the most important part of Monday is to get some momentum going. So for me, what I've found over the years is to game plan, to understand how I'm going to handle the week ahead, exactly what I'm looking for, what I want to get accomplished, and what could potentially be some eventualities that we have to deal with down the line. So that's a big part of my Monday. Also, the second thing, I do like to make trades on Mondays. It's not like we just show up and say, okay, I'm not going to do anything. I'm just going to sit here and chew bubblegum and watch the screen. I don't believe in that either. I think if you're going to sit down and trade. But here's sort of what I would recommend. Is it a good idea to show up on a Monday and take a 10x trade for 10% of your account balance? If you win, you're in great shape. You just doubled up your money and you feel great. But if you lose, you're going to spend the rest of the week trying to dig out of that hole, and that becomes exhausting. It's exhausting to spend 3 days trying to dig out of a hole you created on Monday. So what we do is we try to trade to a positive. I'm always thinking of trading to the positive. I don't want to go into a hole. That doesn't mean that I'm necessarily have paralysis or that I'm not going to act on anything that comes my way. But what I'm not going to do is I'm not going to take a trade where I have to risk a tremendous amount, like a real baggy big stop loss or maybe a highly leveraged trade. I have no intentions of doing that on a Monday. None. I'm not going to do it. And so if that is the case, then what am I doing? I'm being conservative. I'm game planning. I'm focusing on my analytics, getting ready to go tomorrow, Wednesday, and Thursday. And then I'm going to try to get it going. I want that first trade, maybe those first trades, to be positive. And what that means is, hey, maybe if the trade goes 15 pips, 20 pips in my direction, maybe we're going to take that money and move on. Now, the way that I was taught in the futures market was really hyper conservative on Mondays, like taking 2 and 3 ticks on a trade and trying to take 4 or 5 trades and just piling up as safe as we can, just piling up as many ticks and start trading with other people's money as fast as we could. That's how I was taught. And I don't necessarily disagree with that. That's a good way to approach business, especially trading. But what happens is a lot of times if you're trying to be that conservative and that fine, you don't get anywhere. You don't get anywhere. You'll win 3 ticks and then you'll turn around and give back 3 ticks. So what I recommend is staying within your game plan, maybe cutting your leverage down just a little bit, maybe not taking trades where you have a huge stop loss. The goal is to have some momentum going. We got to get it going. And if you're taking big risks on a Monday, sooner or later you're going to lose. And when you do lose, then you're going to say, well, it looks like I'm digging out of this hole all week. And that is demoralizing. It is really difficult to be in this game for a long period of time if you're constantly trying to get back to even. You got to figure out a way to get into the green and trade to the green. Let me see. Adon, is it a sell or a buy? Right now, nothing for gold. It's not a buy or a sell, in my view. We're gonna pull up the macros on it here in just a second, though. All right, this is the week ahead, week 32. I believe it's week 32, somewhere in there. We're over halfway through the year. Monday, it's a quiet day today. There's only a very brief news item that I'm going to cover here. Tuesday, ISM PMIs and the S&P Global PMIs. Don't expect much out of those. Typically, those are just. I won't say that they're fake numbers, but they don't bring the action that they used to bring. You'll get some short-term action, maybe like a 1-minute chart. You'll get a flurry of activity, but that's not going to go trend day up or trend day down for us. Wednesday is a quiet day as well. EIA crude oil inventories. We'll cover that and the crude oil market. Thursday, BOE interest rate decision. That's the big one this week. The Bank of England's going to get involved potentially and maybe make a move against the pound. So what we've got to do is be ready with all of those Great Britain pound pairs to trade for Thursday. And then Friday, there just isn't much on the docket for Friday either. It's no donation Friday. So this week has the potential to be sort of a slower week, but we're seeing a trend day right now in U.S. equities. So, and a lot of that's because of the news cycle. As far as our news today, there really wasn't any out aside from just the breaking news items that we saw to Washington, D.C. What did you have really as an economic event? You had the 3-month T-bill and the 6-month T-bill. What is important here is you see interest rates come down just a little bit. Now, I'm not going to get here and unpack the bond market because it's complex and it's hard, and we start talking about yields and discount rates and all that stuff. We're not going to do that. What we're going to do is keep this real simple. 3-month and 6-month T-bills, that's U.S. Treasuries. Okay, those are offered for sale to the public. Typically, who's buying them? Banks, corporations, people, high net worth investors and people that are trying to get insulation from broader market risks. The T-bill is also known as the risk-free rate. Now, 3-month and 6-month T-bills right now are going for about 4.165. Now, that's down week over week. So here's how to think about it. A falling yield sort of means that their expectations for interest rates have fallen just a little bit. Now, why would a yield fall? A yield would fall if in fact we expected more money to be in the system. So it really was a dovish auction today. A lot of folks believing that those interest rates are coming down. I am not one of them. But they are firing people. And when they fire people, I know I'm smiling when I'm talking about the BLS folks getting fired, but boy, they have been on the hot seat for a long time. And wow, I mean, I'm surprised it took this long for those folks to be replaced. I really do. So, Great Britain Pound USD is going to be the one that's in play for this week. Let's go ahead and take a look. This is a good look at your MT5 platform, Great Britain Pound USD monthly chart. And this was the level that we outlined last week. I was very vocal about it. Go back and check out some of the live streams. And what do you have right there? 38% is going to be 31.52, somewhere down in there. And what did we have really to open up August? We had a low, and our low right down there is right in that neighborhood. Where's it going to be? Right around that 131.52ish, 131.50 handle. Pretty good stuff. Absolutely pretty good stuff there. Nice bounce with that Great Britain Pound USD. So would I be bullish or bearish right now? It's really tough to not be bullish. The technicals, the long-term technicals are telling us that the bidders are in control of this market. They're telling us that 38% level right beneath 132 down at 131.50 was huge. It withstood the test, and now the bidders are back in control, and you're trending up above 132. So for me, I sort of expect this market to fill in a lot of what happened in July, the big sell-off correction in July, and I do believe we grind higher from here. I think that's a pretty good way to be looking at this market. If, in fact, we do sell off and break, get a big break on that BOE news, then we've got to be prepared to change our mind and be able to get short, but we're not there yet. So I would be long. I would be net long here, and I wouldn't play around with the shorts just yet. The U.S. dollar is going to fade. It looks like it's going to fade, and you probably want to be on the other side of it. That would be my guess. Let me see. Ayaz. I hope your name. I struggle with the names, guys. Ayaz. Russia said the ADB will withdraw submarines, or we will strike. Nuclear war could start at any time. There are only 2 days left until the stock market crash. Well, there's a lot of folks that believe that. I don't necessarily disagree, but we've been sort of calling for World War III for the last 2 years or 3 years. I don't know that it happens. I hope it doesn't happen. And hope, you know what I think about hope, but I'm not confident that it won't happen. Right now we have a very serious situation, and there's a lot of saber rattling. There's a lot of high-stakes negotiation. I believe the U.S. envoy is going to Russia for high-stakes talks later this week. So there's a lot going on that front. We're going to cover that as it unravels. But for right this minute, we're not in World War III yet, and that's a good thing. So 2 days until the stock market crashes. I'll remember you said that. Let's talk about stocks right now. Let's go to our U.S. 30. The big level for me on the U.S. 30, this is a monthly chart. Let's go down to a weekly. You can really see what's developing here with regards to the key level, which is 45,000. There's no question that lid, really the lid that's been on the market, up around, 45? I'm just going to eyeball this. Somewhere right in there. That's what's 45.2. But the point is this. You have to know exactly what to do around key levels. And this is sort of how you do MT5 if you want to dial it in exactly. I just want 45,000 even. 45,000 even. Boom, boom, boom. What do you got? Okay. You have to understand key levels. If you're going to be a trader, a lot of folks don't believe you do. You do. And that's prima facie evidence right there. That's as easy as I can really make technical analysis, guys. That is as easy as I can make technical analysis. 45,000, you can see right there. You tested it and failed there. You tested it there. You tested it there. And for about the last month, you tested it there in a big, big way. For me, I take a look at what could potentially happen at 45. There's really only two things that can happen from a given level. Either price can go up or it can go down. And right here, I'm looking at 45 saying, well, the sellers have defended it 1, 2. I mean, take a look, honestly. 1, 2, 3, 4, 5, 6, 7, 8 weeks, 7 weeks. Okay, so that's a big deal to me. So I'm watching 45,000 closely in the US 30. If we break above that zone, then I have no problem buying. It means we're going to make another leg up and probably go to 47.50. Eventually, we will get to 50,000. It will happen. It's just who knows when. But that essentially is what we're looking at for the US 30. Should we be long or short? I'm neither right now, or neither. Depends on where you're from, what neighborhood you're from. But I'm not. I'm in no hurry to go running headlong into this market. I can understand if you're short and you're going to stop yourself out up above 45,000. I get it. That's not a bad way to play this because you could get a big time correction. Now, if I wanted to buy, though, can I really buy from this area? I'm finding it hard to justify a bid right here. I really am. But if you were going to hold longs, one of the ways that we hold longs is a lot of folks will just bid on the open, betting that you're going to get that retracement back up into last week's sort of guts. And then what do you got right there? You've got that low, and you've got to be aware of last week's low. If you trade beneath last week's low, you could really wash this market out, especially if Ayaz's prediction comes right. It proves itself to be right. If we're talking World War III and there's only 2 days left until the stock market crashes, well, we're going to be watching. I don't necessarily believe that to be the case, but it is possible. 45,000 is huge in the US 30. Don't forget that level, especially if you're trading big-time leverage up there on that US 30. Okay, you can see we're just not going to get our trade right here in this gold. Let's go ahead and back off. Let's go back to our yen chart. I want to go ahead and pull a gold, sort of a gold macro chart, because I talk a lot about gold. We all trade gold. Gold's one of the biggest, I would say, if not the biggest commodity out there. It's certainly one of them. So we're going to end with gold and crude oil here. I'm going to give you my rundown and tell you what I think. This is fantastic stuff, though. I mean, this is a weekly chart. You can see the explosive uptrend that really started at the beginning of this year. It's kind of over. It really is. It's kind of over. So boom. I mean, just absolute explosion from January through April. And that's tariff angst. That's sort of a changing of the guard. The inflation got out of control, yada, yada. But right here, we are flat. The gold market's flat. It's been just chopping traders up left and right. So be very careful if you're trading gold. I'll give you a short-term level right here to watch here on a daily time frame or a 4-hour. But this type of zone right here, these types of levels you got to be aware of. 3,500, that's the key level. It's like 45,000 in the US 30. 3,500 is the key level in gold. Do we go up and check that level out? I've been waiting for months now to make another run at 3,500. I don't know that it happens. But if it does, we're we're going to be ready. So we're going to be ready probably to sell right in front of 3,500 and play a short scalp. And if we break, we're going to be buying pullbacks right up in this zone because in my view, once we break 3,500, we're going up to 3,750, which will be your next quarter handle up there. A lot going on in gold. Not much going on in gold. I know I'm talking in circles, but it's the truth. Right here, this is an interesting type of a chart because a lot of folks are going to sit here on the daily and say, okay, it's a trend. We're trending on the daily, and we're not. We're really not. What I like to point out to people that, I get a lot of folks say, Shane, what do you use Bollinger Bands for? You don't really use them as market entries or anything. They tell me exactly what the market's doing, what market state is. And it's very simple. When you get these Bollinger Bands to flatten out and be parallel and shrink, that means the market is definitely in rotation. It's moving sideways and it's flat. There was an old rule that I was taught. I don't really abide by it because I got a lot of rotational trading strategies. But sort of the rule that I was always taught was when the alligator's mouth is closed, you don't trade. And you see right here, that would be the eye, and that's sort of the mouth. That's the gator's mouth, and it's closed. So if you see the gator's mouth shut, maybe you don't trade it. For me, I like to trade flat markets. I don't really have much of a problem with them. This would be more of a complex trade, but I don't necessarily mind taking it just because the risk is going to be relatively low. So what you could do here is you could definitely work a Fibonacci retracement sequence here off the last, 4 days range. You could certainly do that. There's your NFP range. And then now what happened today, we sort of pulled back. Well, you've got just an abundance of indicators right there, right down around 33.41. You've got a Bollinger midpoint right at 33.39 and a 13-day EMA at 33.38. So this area, this $2 zone between probably 33.41 and 33.39 is pretty solid downside support. So you're going to want to be very, very careful with trying to short through that support. So that's absolutely huge. Be careful there. As far as what could we do, maybe. Could we get some converging indicators? Well, multi-time frame analysis to me is a big deal. I mean, it's a really big deal. And you can see it right here on the weekly. We've got a weekly moving average way down the queue. Let's back up to our monthly. Do we have anything really setting up on the monthly? Nope. We just got a big bullish, sort of a bullish pyramid, or excuse me, a bullish pennant. So I'm watching the top side of this market. I think we could probably get long with a little bit of meaning over last month's high, but we've got to be patient and wait first. We're not there yet. We're not on that breakout just yet. So for me, I think you could probably get away with buying those pullbacks there on the daily. But what you have to do is you have to be very, very conservative with your risk management. Remember, this market's flat and it's not trending. Don't be fooled. Don't get fooled by a market that looks like it's trending on short time frames, but it really is just sort of moving flat. We haven't done anything in the gold market pricing-wise in a long time. We've rotated and just sort of, this is what this chart shows us, is we are just sort of oscillating back and forth right up there, 34.50, and then down, and what's the low there, 32.50, and then you're back up, and now you're down. You can see what's happening here. We're trading in a phone booth. It's flat. Those daily ranges are ugly, a lot of dojis in there. That's tough to trade. Tough to trade. Let me see, Rafia. Good to see you, Rafia. Hi, how are you? Let's see. How about the Dow Jones? Well, we just sort of went over that US 30, the Dow Jones. My game plan for that market is relatively simple. I'm watching 45,000 like a hawk, and that sort of is the line in the sand. So if you wanted to sell up there, you probably could. You could be patient and wait for price to break above 45,000, and then we could build the pullback buys to try to get long in that market and get in on a big bullish run. We could certainly do that. For me, I'm watching it closely. I'm sort of I'm neutral right now. I know we're up about 500 points today, something like that, but we're neutral. I wouldn't be diving into this market just yet. Wait. There's nothing wrong with waiting, especially on a Monday. All right, let me see. We got a couple questions here we're going to go ahead and cover, and then we'll sign off for a few. Let me see. Bobby Bob, Shane, what do you think of the Trump tariffs on the 7th regarding the EU? Well, I believe tariffs are a negotiation tool. That's what I believe. So what's happening here? Headlines. Here's the headlines. EU will delay planned U.S. tariffs for 6 months to allow for trade talks. Okay. Trump says he will raise tariffs on India over Russian oil purchases. Okay. Swiss tensions run high as clock ticks on U.S. tariff deadlines. So if we're looking at these headlines, it's all about tariffs. And this guy right here Loves being in the headlines. Loves it. He wants the news to be as big as it possibly can be because it's a negotiation chip. So right here, let's just go ahead and give this a click. Swiss tensions run high as clock on U.S. tariff deadline. Switzerland was hit with a 39% U.S. tariffs, which are set to come into effect later this week. Concerns about the business and economic impact. It's unclear if Switzerland and the U.S. will strike a trade agreement ahead of the deadline. This is exactly where Trump wants them. I'm telling you, this is right in his wheelhouse. Tensions run high. They're looking at a 39% tariffs. You're more than likely going to see a big negotiation this week. No question about it. Do they reach a trade deal? I think so. I think you'll see concessions. Nobody wants a 39% tariff, really. I mean, that's absolutely huge. So it's a 39% tariff. And what's made in Geneva? What, the watches? So if you were going to buy a Rolex or something like that for $10,000 and you're going to have to tack another $4,000 on it, I mean, that's tough. That's tough. I don't think anybody wants to see that. Would not shock me if Trump cut that down to 15% if he got what he wanted. And I don't really know what they're asking for out of Switzerland. Probably something from the banking industry, something from the I don't know. I would say. Well, I got to watch what I say there. I'm not going to say that, but. I would say that part of any trade deal with Switzerland will be more transparency into their lending framework and into what the SNB does. The Swiss National Bank, they're the cowboys. They do whatever they want. They don't tell anybody. It will not shock me if part of Trump's deal is more financial transparency. As a matter of fact, I would bet on it. So that's what we're looking at there. You're absolutely welcome. Can you say something about silver? Yeah, I wish I had a pile of it. Yeah, we can look at silver here in just a second. We'll look at the Swiss franc and we'll look at silver and we'll see. But the last thing I want to cover news-wise is this. Trump spokes conspiracies about jobs data as White House defense firing BLS chief. Now here's the deal. I don't want to see anybody get fired. I really don't. I think it's tough. A lot of those folks are really sharp and they've been in there a long time. But there have been questions. There have been questions about the BLS's numbers for a long time. So I don't want anybody to really think that, oh, well, Trump didn't get the numbers he wanted, so he fired him. That's definitely part of it. But those revisions were epic. And we talked about it last Friday on NFP Live. I said, you wait, heads are going to roll. We called it. We knew what was going to happen. We knew that there was going to be a reaction from the White House against a jobs report that was that bad, and it was bad. So you got to be very, very careful when you try to trade things like this because we knew, we had a feeling that there was going to be repercussions from Friday's numbers. We had a feeling. And the first thing we saw what? We saw our interest rate expectations shift dramatically. We also saw the markets really plummet after that weak jobs data. Now they're on the rebound. So when we're sitting here going, okay, what should we do? What should we do with our money? We got to let things settle down a little bit. We've got tariffs. We've got sort of still the dog days of summer. We've got just really incredible situations that we really don't know what's going to happen. And so we've got to be very conservative. So to answer your question about the Swiss franc, it's a great question. We're going to look at silver, the Swissy, and then we'll go ahead and call it good here. But right here, let's go ahead on your MT5 platform, go over and grab our Swissy and drag it across. So right there's your weekly chart, and you can see exactly what's happened. A bit of a bounce here, but this is ugly stuff, guys. I mean, this is ugly stuff. This has been the downtrend that we've been watching for a long time, developing the Swissy. Why? Safe haven asset. The U.S. dollar's been on it's been on the schneid. I mean, it's just been falling repeatedly. And one of the stronger currencies out there is always typically the Swiss franc. So, is it time? I mean, the question right here from Gordon is, should I be shorting the franc? And it's not necessarily a bad idea. Let's go ahead and pull up. We had a trade idea out on the Swiss franc last week, and it didn't work. Because we got caught up in really the issues. I mean, this right here was our short, and we got run out of this thing right up in here before we got the big plunge down to our profit target. So if you stayed in that trade, you won, but it was really difficult. I pulled the plug on it. Once we got up above and sort of established above our 12, our stop loss that was 81.59, I believe. I didn't want any part of it anymore. I said, I'm not interested in this, but you can see price comes right back down. So if you're interested in shorting the franc, what would be a great trade location? Right here, I have no interest in shorting from down in here. You can see we bounced right off of that. We bounced right off of that moving average and the Bollinger midpoint. Now we rallied back up to the top of this thing. I would be watching my weeklies. I still think still have a lot of confidence in that 81 area setting up as resistance. So if you wanted to take a short, I would wait for a print of 81. maybe 81.05, somewhere up in there, and that would be the short that I would be looking at. I wouldn't be interested in shorting right this minute. There's the tariffs. The tariff announcements can come at any time. Typically, they come after the market. And one last thing I'm going to do is talk a little bit about time zones here. In the United States, really, any negotiations that are going to be taking place in Europe more than likely are going to be outside of the trading hours. It's very possible. We've seen that repeatedly on weekends and during the U.S. overnight. The deals typically are cut before the U.S. Open. Now, is that by design? Well, I don't know, but it seems to be the pattern. So the idea that we're going to get a big Swissy announcement during our business hours here in the States, probably not. Probably not. But it is possible. And so we've got to be ready for anything. With those kind of tariffs on the line, 39% tariffs, Gordon, I probably would be staying out for right this minute. There isn't really any market movers out for the U.S. dollar this week except for tariffs and except for just the normal Trump news cycle. And if we've learned anything over the last 6 months is that the news can come from anywhere and say anything. For me, the war stuff that Ayaz brought up is ominous. I didn't want to talk war today, and I'm not going to. But the Trump administration deploying the nuclear submarines, that's something that is pretty serious stuff. Is it a bargaining chip, negotiation chip? Yeah, could be. All right, last one, silver. Silver's pretty cut and dry for me. I mean, I'm bullish. All this analysis here doesn't really mean much. We'll do fresh analytics, but the one thing that I always point out is key levels. So if you guys are serious about trading these markets and Shane, I don't really know where price is going to sort of react or where people are going to get involved at. Look at your key levels. Look at your key levels. If you look at your key levels, you're going to have an idea of where the market is going to either turn or it's going to break out at. 40 even is a big round number. It's a natural area it's natural resistance is what it is. You're going to have an opportunity to make all kinds of trades up there at 40. So right now, I'm sort of being patient, waiting for that 40. Now, on the other hand, what can we do? We can certainly buy it. I have no problem buying silver. You can see the big correction that we had last week based on your Fed, based on sort of the hawkish Fed, and also based on that NFP report brought just a tremendous amount of action in the market. And you can see that low went right down to 78%, which is 36, and then you get the big bounce back. I would love to buy down here at a discount. I've got my 13-week EMA down there at 36.14. You've also got that 78% level up at 36.17. That's pretty good stuff. So I would be looking to bid. I'd be a net bidder from down here. I think that's absolutely imperative that we recognize that as being robust support. Do I want to sell this market? I don't. Could you sell it? Sure. You could sell it. I mean, you could run some Fibonacci's from there to there. Let's go ahead and try one other exercise here. I love my 920. I always forget about my 920, but let's go ahead and take a look at silver on the 920. Interesting, huh? You had an absolute fantastic bid back here. Really choppy market conditions, a couple of losers there, but you had a fantastic bid back on the 20th of May that got you in on a heck of a run. So what are we looking at right now? Well, we've got a cross under brewing, which could potentially be a sell signal on the daily time frame on the silver chart. I don't believe it's going to set up just yet, but maybe if we get a negative close tomorrow, potentially we could be in a position to have a sell signal here on this 920 EMA crossover. I don't believe that that's going to be a good trade for me personally. I really like my Fibonacci's, but if we do get this sell to set up, you could certainly take the sell. Just be ready for this downside support. That's a big deal down there. 13-week EMA sort of converging with that 78% level. That's a big one. So right now, if I had to say anything, Duyi, I hope that's how you pronounce your name, Duyi, Tuniyeri. Bullish or bearish? I'm still bullish. I'm bullish metals, even though they are rotating. They are moving slowly. They're not trending really anymore. I'm looking at those as being pretty good to the top side. I love a pullback here. If we could get another pullback on the weekly time frame, that's not a bad trade down there for silver. If you wanted to wait, if you wanted to say, okay, I don't want that level, it's already been hit. I want something completely fresh. Back up to that monthly. Have a good look at what you've got cooking here. You've got a big macro level, sort of like we have in gold, the 3,100 level I've talked a lot about. This area right in here, potentially you could be looking to get long at 35, maybe 35.50, maybe 30, 35.75, something like that. That's what I would be looking at for silver. Still bullish. Still bullish. We'll just wait and see. All right, guys, I'm going to go ahead and sign off. Unfortunately, over the weekend, we had a tremendous tragedy here in where I live, up in Montana. We had a mass shooting that took place in Anaconda, Montana. And the suspect's still on the loose, ran off in the mountains, and is armed and dangerous. So the reason why I bring this up is I know there's some folks in my neck of the woods that watch these streams. So thoughts and prayers go out to everybody that was impacted in the entire community. I know that I live in Dillon, Montana, which is about 40 miles, 50 miles down the road from Anaconda, Montana. These are small towns. These are close-knit communities. And when things like this happen, you feel it. I mean, the law enforcement here has been on high alert. We've sort of been on high alert this weekend, not really knowing, where exactly this shooter is. Supposedly he's up in the woods somewhere. They're expecting to find him. We don't know. So thoughts and prayers go out to everybody that was impacted. These acts of violence happen more and more and more and more and more. I'm tired of it. I'm tired of seeing it on the news. But that's sort of just the world we live in. So we got to stay vigilant, be smart. If you feel like you're not well, if you're struggling mentally, there's nothing wrong with getting some help. Just get some help. And that's the number one thing. There's a lot of help out there. There's a lot of resources. Get some help. But, like I said, thoughts and prayers go out to the entire community up there in Anaconda. Sort of is known as it's a close-knit community, sort of a rough area. Can be rough. There's a lot of folks out there that are pretty tough. But it's a strong town, and it will bounce back. That's what I want to say about that, because I know there's some people up there that are watching. All right, everybody. I want to thank you for joining me. Really a tremendous trading day to start the week. The U.S. 30's up 500 points, and it could be going higher. Remember, guys, the big news this week is going to be the BOE, so be watching your Great Britain pound. We're going to put out the Switch Markets newsletter. That's going to be out for the Tuesday session. I'm going to film the pick of the week here after the market closes today. I'm also going to have a trade idea out here in the How to Trade trading room, so if you're interested in maybe taking a look at one of these markets that we just looked at, I'll probably write something up a little bit more formal and get the trade idea out there. All right, everybody, I'm going to go ahead and sign off for a while. You're absolutely welcome. Thoughts and prayers. I sure appreciate that, Gordon. Thank you. Challenging weekend, really challenging, but that's the way it is. Just move forward, onward and upward. We're going to trade well. We're going to do well this week. I want everybody to get off on the right foot. So if you took a little bit of a loss this morning, don't worry. There's plenty more trades. There's a lot of opportunities this week. We just got to cash in. Remember, we just got to cash in on a few good trades, and we'll be sitting pretty come Friday, and that's the entirety of it. All right, guys, I'm going to go ahead and sign off here for a few hours. I'll be back tomorrow. We're going to be doing all sorts of different things. Check out our How to Trade live stream schedule inside of the trading room, and we're going to be back at the same time tomorrow. See if we can maybe do a workshop. What is tomorrow? I already forget. So many things. Yep, Market Watch, the Fed jobs and recession. We're going to cover the news cycle. There's going to be more about this Russia situation. We're going to be into that deep, and then we're also going to be talking about what exactly happened with the jobs numbers. Unbelievable. Absolutely unbelievable. All right, everybody. You have a fantastic trading day. Have a great week. Trade the action well, and we'll talk soon. See you.